I hope you had a very good start into the new year and are willing to accept whatever the market is giving us. And exactly that's the point, because the stock market especially is not showing us the very best picture so far. We saw some drawbacks or drawdowns in the market, and the market is coming down a little bit and giving us a new fear of lower prices. But what shall we talk about that? Let's stick with the chart and see what we can expect from there. Well, let's start, of course, with the mother of all indices, the Dow Jones. In this case, this is the March contract of the future, the E-mini future, a really typical thing to trade if you want to trade the Dow Jones. You can see in the big picture here in the upper left corner, this is the weekly chart, that we have still two valid pictures here. One is really bullish, expecting that the market is overshooting the last high, continuing to higher grounds. Maybe this is just an educated guess. It's not 100% sure this will happen exactly like I've drawn it here. This is 44,000, for example, can be 55,000 or something like this. This is just a raw idea what the market is doing here, which is more or less the bullish picture continuing in a pattern which is really, really typical for a bull market. An ABC, no, it's not an ABC, it is an 5-wave move pattern, which is an impulsive move to the upside. This is absolutely still valid, no doubt about this. And as long as the market is staying above these green levels here, which are roughly around 33,000, everything what we see here is just a simple corrective pattern. I know many people are doubting it. Many people are thinking, but such a long time. Yes, it can be. This is something like a sideways correction maybe. I'm not absolutely sure which pattern it is. It can be in the very end here something like a sharp correction down to this area. But if we have something in this size, everything is very typical and normal. It is not really special. I know it looks a little bit different, but if you can expect something like this, this is just roughly the same like you have here, depending on what highs you take here. But around these levels, everything is still okay. So we can accept some drawbacks here, some lower prices without fearing the worst. On the other side, when the market is indeed turning around at this point here, then we have a typical ABC pattern, which is not so uncommon in this situation. It can unfold like a big ABC first wave, ABC second wave, and a third wave, a C with this really, really strong. And you can see the shape of this pattern, what I've drawn here, this ABC, is roughly exactly the same like we had here in the first part here with a Corona crash and at the very end 2020. So you see this pattern is quite typical. It's common. It's nothing really special. It's called a flat pattern and could lead us down to lower prices, even below the Corona crash low. So well below 20,000 and even further down, maybe 15,000. Would not be a surprise if this pattern unfolds. So which one will come? Currently, I'm not too much into the bearish picture here. I think we have a very good chance that we are still in a bullish mood here. This is still possible. So we have to talk about some fundamental ideas currently. The stock market, of course, is looking closely at the Fed minutes, for example, what the Federal Reserve Bank is telling us about the interest rate hikes. We expect 3 hikes this year, and we have some indication the first will be in March. High indication from the market that this will happen. So we can expect that the interest rate is rising, will be hiked by the Fed and is rising from the market as well. And we can expect that the Fed is tightening the monetary policy, so they are not only giving not more new money into the market, they are as well reducing their balance sheet. So this will reduce the money in the market, which might lead to really a bad situation for the stock market. Of course, this is not 100% sure because the numbers look very big, but in comparison to the market liquidity, it is not a big deal. We can survive this if the mood is still bullish. But currently the mood is a little bit in a shaky situation. We can see this here for a long time. The market is not really moving forward. And now we come to a very interesting point here. This is the Dow Jones. And the current situation is just leading us a little bit lower here. But you can see that the very end of this pattern here is not giving us any strength. You can see we had some setbacks, some setbacks, some setbacks. We have here on a smaller time frame setbacks, setbacks. But they are all overlapping. And overlapping price patterns are typically called corrective patterns. Or at the very end of a market. It might, of a bull market, for example, a trend market. So in this case, you might expect this market direction is ending, which is still an upward market. And we can expect that the market is taking a breather until we reach this level here. And then we will have a decision roughly around this. It's not pinpoint 33,000. But as long as the market is staying above this level, or maybe just a little bit below. It's not 1 point below. Now we have a crash. No, that's not the point. But roughly around this level, everything is still okay. It might be still something like a corrective pattern unfolding in a really awkward way, maybe for many people. But as long as we are not overshooting these levels or undershooting these levels very much, everything seems to be okay. So the bullish people and the people who have long-term positions on the bull side, they still may stay in the market. If they can accept the drawback until this point here, then everything is okay. If you don't like this, you should prepare for maybe some kind of a down move here. We will see here. For the very next days, you should have a closer look what this is unfolding here. If you see some setbacks coming back in the corrective pattern itself, you may expect something like this, which definitely have a very good chance to unfold like this here. Only when the market is overshooting these levels here, in case it looks like this, or the market is giving us a very corrective pattern here, then we can of course directly go for the long side, because this is typically indicating that this market is not, or this trend is not the strongest one, and we can see the next overshooting here as well. But we should expect something like this. The market is currently in the situation that they are not trusting so much what the market is doing here, and some people are waiting for lower price levels here. So we should expect that the market is indeed unfolding like this until these levels here. It's not a promise, but it's a very nice, a typical situation that the market will do like this. What about the S&P 500? And now we are coming to a very interesting field. We have two really interesting market situations. One is the broad market, all the big, or the many companies, smaller companies, famous companies, not so famous companies, which are more or less not the high-tech market. And we have the high-tech situation, like Tesla, like Apple or Meta. We have Alphabet now, we have Tesla, whatever. I may have forgotten many of them, but you know the big players in the market, and they have a big participation in this index here, the S&P 500, in this case also the March contract. So you can see that this market is more or less moving the same way, but this part is a little bit different, especially the end of this one, which was more or less looking like this with the Dow Jones. This part is roughly the same here, the Corona situation and the pre-Corona situation here from 2018 beginning here. And you can see this part is a little bit different. And this is more or less because the high-tech market, especially the big stocks there, are pushing the S&P very much. However, having a closer look at the very end is indicating that these markets are struggling a little bit currently. You can see we have a really typical 5-wave pattern here. And now it depends for the very next days whether we get something in a corrective mood here, which may look something like this. Alternatively, if you have something like this, or if you have a typical ABC pattern, both are very corrective patterns. ABC is really typical for a corrective pattern, or something like moving into one direction, but overlapping counter moves. This one are counter moves and they are overlapping, so both are corrective patterns. So If you see something like this in the very next days, or if you see something like this in the very next days, and that's really important, and the market is undershooting the last intermediate low here, it may look like this. So in this case, it's this, for example. Then we may expect at least something like this again. So this is something we constantly try to trade. Of course, we don't see this in a clear pattern every day. If you don't understand the situation, if you don't see this unfolding like this, so the first part, strong move, weak move, and breaking these levels here, then we are not trading, of course, and many times we don't see it clearly, but when we see it clearly, we can at least expect something like this happening again to unfold a bigger sized ABC pattern. And yes, you're absolutely right, ABC pattern is exactly the same like this, but in the other direction. So when the market then is overshooting this level, then we can continue to the upside. However, the current move here to the upside is not looking super strong, to be honest, and is giving us the same impression like we have with the Dow Jones, that this may come to an end in this case. And the reason for this may be that the high-tech market is struggling. And before we look at the Nasdaq, let's have a closer look at the US Treasury notes. In this case, the 10-year notes. And you can see that the price levels are coming down strongly. The last week was really a bad week here. Of course, also driven by the news from the Fed and all the thoughts about this one. This is giving us the price level of these notes. And the lower the price is, the higher the interest is you can get from this one. The return from your notes, which is giving you a certain interest, is in percentage higher when the price level is going down. So this is really, really important to understand, because this is indicating that the interest level is already rising in the market, not the Fed funds, not the Fed rates, the Fed rates. It is the market rates of interest, they are rising currently. They have been, I did not calculate the last way, here already it was roughly 1.7%. And now they are even below that, so they are even rising. So this is indicating that we have a higher interest rate. We can expect maybe even more. Let's have a closer look what this will mean for the tech market, because many people are thinking there's a big relation between the tech market and the interest rates. The higher the interest rates, the higher the danger for these high-tech companies. They are quite sensitive on this, that their market needs to turn around. However, the current situation in the Nasdaq, for example, this is the March contract of the E-mini Nasdaq future. Currently, the picture, for example, in a 4-hourly chart is still very nice in this part. And this looks like an ABC pattern in this part. So when the market, or better said, if the market is breaking through this level, or indicating something like this in a strong move to the upside, shaky move to the downside, it's exactly the same idea I've drawn in the S&P 500. If the market is doing something like this on a lower time frame, you can of course expect something like this continuing here. And if you see, wow, this target is above this level here, then you may have a lower entry point, a reduced risk here in this market, and the expectation that even after this break, the market is continuing even higher. So it is quite interesting whether the market is able to break through this level. It is this level. I can redraw it and make it a little bit clearer. This is the highest point in December 28th here roughly, and it is roughly here for the future 16,656. Please check it on your chart. It may be a little bit different depending on the contracts you are trading and you want to trade. Maybe they're different contract month, or you trade some other vehicles like a CFD or other possible trading vehicles. But if you trade something like this, you can expect that a break through this high or an unfolded pattern like this is giving us a really, really bullish situation. On the other side, when the market is continuing to the downside, the more the market is falling, the worse the picture gets. And we should have in mind that this setbacks typically can go into this area here, roughly this area. We are still well in this area, no problem at all. But we should not undershoot this level too much, which is 15,284. In this case, it's a Fibonacci relation 61.8. It can be a little bit lower, but latest when the market is reaching and breaking this level 14,881, not exactly, but this is the exact number here, but roughly around this level, then you can expect, wow, is this really bullish? I doubt it. Yes, indeed, this would kill the bullish mood for this picture at least, and we cannot directly expect something like this. It is possible, of course, but probabilities are way lower in this case. So at the very beginning, I mentioned the tech market and the broad market, and I want to share the Russel 2000 with you, which is a completely different chart, and many people are not very much aware of it. I was trading this market a long time ago, very, very regularly. Currently, I'm a little bit... I did not trade this market too much, but we were talking in BORN-4-Trading here with some guys about this market, and I thought, well, it's really interesting to have a closer look at this market as well, because this is a completely different market. This market is indicating the broad situation. 2,000 stocks, not super focused on the high-tech market, of course. So you can see that we have a completely different picture. Nearly the last year, completely 2021, was a sideways market. It did not lead us anyway. So the most stocks did not perform the last year. So if you have bought some stocks, not the high-tech levels or the high-tech stocks, not some Tesla, Apple, Amazon, Google or Alphabet or whatever, but some broad market stocks, you may have been disappointed because the market did not move so much. What is this indicating? And what we see here is indeed giving us maybe not the best picture here. We may expect that this picture here, first move, second, third move, fourth, fifth, maybe, would lead the market into this area here for the next month. We can check the Fibonacci's here and see, okay, this might be the target for the next month. And even this is not a bearish picture. This is only some breather in this picture. When the market is reaching this is not clearly indicating, okay, bull market ends, let's meet again below 1,000. No, that's not the case. It can be after the strong movement we've seen here before, but it is at least the minimum for a typical setback to reach somewhere around this level. It can be around these levels as well. We will see that, but we can expect that this market is going down even below the 2,000 level, and let's expect something 1,900, 1,800, something like this would be a typical situation if the market continues this picture. But we have an alternative count for this. It is possible that this is the first wave, second, third wave, fourth wave, and now is the fifth wave coming. It is possible. It is not my preferred count because the fourth wave here, the corrective pattern here, is way bigger than what we've seen here. But it is somehow possible. How can we decide which one will unfold in the next step here? We can see this maybe when we have a closer look at what we have seen here from that high. This is the same high here in October last year or November last year. So when the market here in early November is coming down strongly, yes, had a ABC pattern here, which is something like a sideways correction. I know many people say, didn't you draw something like an ABC and this is clearly higher than the starting point? Yes, this is a typical sharp correction, which is called a zigzag, for example, double zigzag, something like this, which is really typical. But we unfortunately have some ugly guys, which look more or less like this. And this is named a sideways correction because it is most of the time moving more to the side than to one direction. And this can even undershoot this point. If you say, I never saw something like this, well, it is something you don't see here in the Corona situation. But for example, in the Dow Jones, you just saw it here. This point is a little bit higher than the starting point. And even this lower time frame, this point, you have an ABC down, an ABC up, and the last movement to the downside, this is a little bit higher. In this case here, the first case, it is more an ABC at the very end, so this is a double sideways. This is called a flat correction because it ends with a really sharp movement, which is an impulsive move. But these kinds of sideways corrections are really, really typical. It's nothing special. You can roughly say half of the corrective patterns are looking like this, and the other half of the corrective patterns are more or less looking like this. So it is not untypical. It is a really typical thing that things like this are happening. And this can be the case here in this case. Because otherwise, unfolding this one here is not really easy to understand what this market is doing here. So it depends now very, very much what is happening here. Will this be a corrective pattern or an impulsive move? And if we check this last movement here in the 4-hourly chart, we can see, wow, this more or less looks like an impulsive move. And now it is crucial when the next hours, the next few days are coming up in a corrective pattern, like we've talked about this before many times, we can expect when breaking through this level that we can see something more, and you can see the targets for this, which can be deducted from this one. You can see this is the first move. If this is continuing, we have a really low point here. Nearly at this point, there is no bullish mood anymore. It might be really typical that the market is continuing to the downside. So currently, the next few days are really, really interesting for the stock market, especially for the American stock market, because they will lead where the broad market, but also the tech market and the blue chips from the Dow Jones will lead for the next few weeks, month, and even maybe years. So we will have a really, really important week ahead of us. So please watch closely what the market is giving us and follow the charts, the price movements, because it is not giving us a clear picture what will definitely happening in the future. We are not having a glass ball and knowing what the future is bringing, but we can see from the action, the price action of all the market participants, what they are willing to accept and what they are planning to do. So this is the American market. Let's have a closer look to the Asian market, because I think this is also really, really nice what we see here. In this case, we have something with a Nikkei 225, the Tokyo stock market here, the most important stocks there. And some people thought and hoped that the market directly will move to the upside. But we should keep in mind that we had strong movement into this direction, but quite shaky movement into this direction. A strong movement into this direction, and quite shaky movement with overlapping again into this direction. So I clearly think that bull market is not the right word for this one. It clearly looks that the up movements here and also here are looking more like in a corrective pattern. And I would expect that the market somehow will go lower, undershoot maybe this level, this level, this level, this level, and is reaching somewhere around this one, which is quite typical anyway. So I would not doubt it. I would not accuse this market as a really bad market. No, it looks like finally we got there where the market typically ends, nearby the 38.2. It does not necessarily go to these levels here. Don't be super afraid of this market. It is possible that the market can find some hold here at 25,000, for example, and then regain strength and come back. And if you see something like this, we can discuss this for entering the bull market. But currently what I see here is not giving me the indication bullish is the right direction, because overlapping patterns into a market direction, which is up in this case, but overlapping, no, this is really doubtful that this is the best situation here. So Also, the Nikkei 225 is in a situation which looks quite bad for the bull side, which is really, really typical because the Nikkei, the Tokyo market, is not 100% the same like the American market, but orientated to the Western stock exchanges. And when the American market is falling down, the Nikkei is more or less also in the situation to follow this direction. Not one-on-one, but we have a good chance for this. But what about the China market? The Chinese markets, Shanghai Composite here in this case, is still leading to the upside, but you can also see that the big picture is not a really good bullish market. This is not like a bull market looks like. We should expect that the market in this case is still giving us a good chance to continue here for a lower price level again, which may be roughly 3,500, maybe a little bit lower. There are the first Fibonacci levels. In this case, even a cluster of many similar sized movements. For example, this one, we have a Fibonacci retracement, we have maybe some extensions there. We can discuss this level later, but we should have in mind this easily can happen. However, in a shorter time frame, we have the opportunity that the market is not coming down necessarily at this very moment. So I will push this a little bit more to the right side because it's unclear whether the market is directly falling from here or whether the market is giving us another overshooting high maybe and then falling down. Because the current situation here is giving us something which is also not in the best mood here. In case the market is breaking this level here, this is the high from the 4th of January. In case it's not giving, I'm not telling you that the market is doing this, but in case the market is doing this, overshooting this, I see a strong chance that we will overshoot these levels here again. So we will see something like a new high here in this chart. So maybe something above 3,740 and higher maybe. And then we will see whether the market is strong enough or will go down like I've mentioned here before. So currently this is giving us at least a chance. Of course, it is no chance to go long as long as the market is not pushing through this level here. You should stay out of the market or sell short whatever you get here, especially if you have something like an ABC pattern to the upside. Then if you see something like this, you can expect that the market is continuing to the downside when breaking through some levels. What about the Hong Kong market? The Hang Seng stock index here in this case is completely different to all the other markets. It's not related to all the price actions, and you can see currently it looks a little bit like a floor building here. You can see that the market is not pushing too strong to the downside. The last movements here in the last few hours was quite strong, so this is giving us a chance for a bull market. But to be honest, to convince me to buy this market in the big picture, I want to see some strong movements and some shaky to the downside. Currently, it is more if you have a strong movement to the downside and something on a smaller time frame. It always was disappointed after the one-on-one turning around. After the one-on-one turning around. You can see these ABC patterns are typical for corrective price levels, internal and in the overall view. So you can see this is quite typical. So currently it needs more power to the upside to convince me to buy this market. So of course there are many more stock markets I completely took out here and did not talk about the German market, for example, the Swiss markets, or all the other European markets. I will do this in a different video, of course, but you can find out from what I've told you here, what I've drawn here in the market, in the charts. Maybe try out by yourself. Find out what your special and beloved market is doing currently, and find out whether you can see the same structure, the same behavior, and then you can trade these markets as well, of course. Otherwise, follow me on this channel and you will have more videos like this in the future, and also some explanation videos here. I want to give you more and more content in the near future. I'm just working on some parts of my daily work to make it a little bit easier, so I have more time to talk to you and give you some more ideas and trading choices here with the current situation. So this is from my side for this week. Have a good time. and trade successfully and stay healthy. Bye bye.